Hi, everyone. Glad you could join us this evening. We're live everywhere tonight. So this is a first for me. I'll go live on Instagram. It seems more private, but I never actually go live on Facebook. But uh, start new things, take challenges, right? So just to introduce myself, I'm Katrina Martin. I own Wild Tax and Advisory Service. I'm known as a tax whisperer on Instagram and YouTube and all those things. But on Facebook, I'm Katrina L. Martin. I'm an enrolled agent, so I can represent you with the IRS if you need to have assistance with settling a debt with them or to figure out how to catch back up on your taxes. But I specialize in working with Airbnb hosts and owners on tax strategy, tax planning, and training you how to structure and set up your business the right way. And that goes across all industries, but specifically with Airbnb owners. A lot of times you're new to the business space. And so that way, I want to make sure you're doing this the right way because this is a very high profit generating business. You want to make sure that you do it right. And one of the reasons why I focus on this area is because unlike traditional businesses where if you're doing long-term rentals, sometimes you're getting passive income, your stuff goes on a Schedule E on your tax return. So it kind of, you don't pay the self-employment tax and that sort of thing. Whereas in the short-term rental space is a little bit different. You're really structured as a business. So you're paying the self-employment tax, it's going on Schedule C. And Schedule C returns are the top returns that are audited. So I want to make sure that you're doing this right and making sure that before you jump into this business or until you try to really scale into this business, making sure that you have all your ducks in a row and making sure that you understand what to do. So last week we talked about how to set up your business as an LLC. Did you need to be an LLC to join this business? And I'll recap. I said, no, you didn't need to, but it would be nice to separate yourself from the business and also kind of put that nice little buffer in there to protect yourself. And then the other thing is the other part is, and this week we're going to focus on profits because one of the things that a lot of people do, especially when they're entering this space, is not forecast or be not as prepared as they need to be to enter in the space. I spoke with a young lady a couple days ago, and she had signed into an agreement for a complex, I want to say in Tennessee or somewhere, I believe. And so they were specifically targeting people that wanted to enter in the Airbnb space. And I think that it was $3,300 a month, but she didn't do all her numbers. So she's the first few months, it actually was making a profit and it was going really well. But these last couple months, outside of the holidays, things tend to slow down a little bit, right? Leading into tax season. And so she's had to come out of pocket to keep the place up and running. But she knew all of her numbers individually, but not as a whole and how they actually work together. And so making sure that you look into that. So we talked about her numbers, we laid it down and figured out what was her break-even point, how much she needed to have per day, whether the place was empty or full or whatever, and what was the lowest price point that she could go to where it was costing her money. Because at some point it's like, do I leave it sitting here and not make any money? Or do I actually bring somebody in and then I have cleaning costs that are associated with it. Then I have liability concerns because if somebody's in there, there's a potential for somebody to get hurt or also damages. So you have to understand all of the potential, what are the fixed costs in this business, as opposed to what are the variable costs into this business. And before signing into, especially a rental arbitrage agreement, looking at all of those numbers to make sure that it makes sense. But then I'll back up just a little bit and just talk about business just in general. I try to make it as simple as possible. As far as your taxes and as far as your business, there's two areas to focus on: profit and expenses, right? So what am I bringing in? And then what is it costing me to do that? So you need to look at all of those numbers. So there are some things that are fixed costs in this space, in the Airbnb space. So you know where your rent's going to be, you know where your insurance is going to be, you know where your park, if you have to pay for parking, some places have parking expenses, you know what those things are going to be, you know where your internet cost things are going to be. But those variable costs are those things that kind of shock you and make you that those costs vary every month. One of the biggest expenses that you're going to have is your housekeeping expense. even though you have a fixed cost, say you have a housekeeping service, and I think her housekeeping service was charging her $94 a month, $94 per cleaning session, but she actually charged the guest $150. So she did have a profit there if somebody was actually in the space, but that was $94 every time somebody came and stayed, because they have to come clean immediately when someone leaves. So that's a variable cost because you don't know how many stays you're going to have all the time. You can forecast and see how many days you have booked out as far ahead, but that can change. You've got some empty days, somebody may come in. So those are variable costs. Those things change. And then the other thing that changes is the biggest cost that you're going to have is taxes. And taxes in the Airbnb space can be, depending on your location, can be a huge cost, because you figure there's occupancy taxes, there's property taxes, there's there's taxes on your income, there's self-employment tax. So there's a lot of taxes so that's a variable cost. So you need to make sure that your business is structured properly and that you're keeping the proper accounting so that you know what's really going on in your business and you can forecast and figure out if you need to start paying some estimated taxes, or if you actually own the space, do some tax planning where that way where you can actually figure out how can I pay $0 in taxes if at all possible. And I see we have Carol on the line. Carol, you're with Cost Segmentation Company, and that's something that I use with my owners a lot of times is cost segmentation studies. If you actually own your rental property, a cost segmentation study can help you. Yes, it can help you. It can actually help you accelerate your depreciation, where you don't have to take your depreciation in short chunks over time. You can actually take more of them up front to lower your tax liability right now, while you really need to reduce your profits and your tax liability.
Yeah, so I'm in Florida now. And I spend my winters down here, and I'm working with several Airbnb owners and short-term rental properties. And it's a great way to get the cash in your hand to do the improvements, because a lot of these they're buying a lot of these properties that look like hell.
Yeah,
and they've got to spend a lot of money to get them into shape. But then they stay rented.
Yeah, absolutely.
A lot of the rental agreements that I've looked at, people have relationships with the hospitals, with nurses, and in order to keep their spaces filled. Yes. They don't just go straight to Airbnb. They work with the municipalities as well.
Absolutely. Yeah.
Okay, and I'll leave you to it.
Absolutely. Yeah. Thank you for that. Yeah, because in a lot of places too if you're actually doing the rental arbitrage and you're trying to get someone who actually owns the property to allow you to rent it and then sublease it, that's one of the strategies that people utilize. Is they don't just let anybody stay there. They may target traveling nurses, they may target missionaries, because you'll know who's coming in there and you know that they're there for business. And that's called the corporate leasing strategy, where you're leasing to people that are in a corporate standpoint and they're coming there for a specific reason. So owners are a lot more receptive to allowing you to rent your space and sublet it for that particular person. So the purpose. So that's the corporate leasing strategy. So there's a few strategies with Airbnb. One is you own a property and you decide I'm not going to do the long-term leasing. I'm going to do the short-term leasing. So that's strategy one. Strategy two is the corporate leasing, which is what Carol and I were just talking about, where you're targeting a particular audience. You're looking for corporations or a particular subset of the market that you're going to particularly target for that space. The third is the rental arbitrage, where you're renting a place and you're in turn leasing it out for short-term rentals. So you're putting it on Airbnb, VRBO. So those are three strategies. They're all very profitable, but they all come with their own different nuances. And the way that you can actually do where you can actually help to get the money in, like Carol was talking about, to fix it up, that's if you're an actual owner of that property. You have to actually own those properties in order to use that particular strategy. So, but I highly recommend it. When I do tax planning and I'm working with real estate investors, if they own property and they own rental properties, that's the first strategy that we're going to go to, because that's going to be the biggest bang for their buck, because we're going to get, especially if they haven't really been using their depreciation over time, or it's a new purchase. So they have all this depreciation available to them, so they can take as much upfront. I actually just did one last week, and it was $101,000 available to them. Oh, that they can take in year one. Of course, we didn't need that much. She didn't have that much in tax liability, but it's nice to know that if she did need it, she could, and she could carry it forward, use what she needed, and then carry that forward for the years ahead. So that's a cool strategy if you're an actual owner of the property. But corporate leasing, you're targeting a particular subset of the market. You're reaching out to traveling nurses, missionaries. Who else do you think, Carol?
It's people who have consulting jobs, people who have
Absolutely.
who have a where they need to be 2 or 3 months in a location. They want to move into something and not necessarily be in a hotel.
Absolutely.
Airbnb is a really good alternative for that.
Yeah, definitely. Feel like you're at home away from home. And I actually prefer staying in Airbnbs now, especially I used to prefer staying in hotels because I felt like it was a little safety there, like, there's security around and that sort of thing. But now the way that it's structured, I kind of like having that home away from home feel. And I like the fact that I feel like I have this key and not everybody in the hotel has this key. And I also don't, and they're not using the housekeeping systems like they were before. They're really not cleaning your rooms like they were before. So they're like, you can raise your hand if you want your room clean. Whereas, this place has been professionally cleaned before you got there. It feels like home. You can bring your family if you want to, and you're not paying for all these multiple rooms.
And your dog.
And your pets if you want to.
Yeah. I'm in this Airbnb in Tampa. This is my 3rd year here. And what I get is my pool and my hot tub and
Absolutely.
my private space. And and there's nobody, it's just a neighborhood.
Yeah,
so it's a very different feel for the winter than being here. And a lot of people do it. They just lease out part of their home.
Yes,
and
definitely.
And so that's a good thing to do with your personal residence too.
Absolutely.
You can look at that as well.
And I'd say I recommend people to, even if you haven't considered going on, just go on Airbnb and practice logging in and setting up an account. And you'll see how many things that you can actually lease out. It doesn't necessarily need to be a home. It could be a boat. It could be a tiki. It could be a RV. It could be a tent. It could be anything. They have unique spaces, and those places actually rent really rapidly because people are looking for experiences as opposed to just traveling the traditional route a lot of times. So those they cater to that. So there's actually tree houses on there. There's actually there's a little bit there's a little bit of everything on there. So just go in there and play, and then actually look at the options that you have on there. But I wanted to focus on making sure that you're getting your profits. Don't sign a contract because, like I told the owner that I spoke with the other day, I told her, luckily she only signed a year lease. So she's not locked in for this significant amount of time. But the thing about it is that she's going to have to come out of pocket until it starts rebooking. I believe that it'll upswing again because travel season is going to start again. But the thing that you want to focus on is running your numbers prior to signing anything. You know where your fixed costs are going to be. So like I say, for example, let's say you see a place and it's $2,000 per month. Don't just look at your $2,000 per month, divide that out over 30 days, because that's what the average month is, and see that you need to make 66, 67 per day in order to pay for that space. And you're not trying to come out of pocket on that, right? So you need to know what your daily rent rate on that place is going to be before you actually book it out. But what my focus is to making sure that you understand what your true break-even point is, understanding what profit is. Profit is the definition of profit is income minus cost equals profit. So your income minus all of your expenses equals what you're actually profiting. So you need to profit first, because if you're actually coming out of pocket, your business is costing you. And sometimes that happens, and there's periods where that's going to happen, but it shouldn't be consistent. You need to be bringing in more than you're spending out. That is ultimately the goal for being in business. It's not a hobby. If you're just doing it and volunteering for it, it's a hobby. But if you're actually in it for the profit, you need to run your numbers, and not only run your numbers, but once you should set yourself up as a business, Do your books. Do your books. Make sure that you're keeping things separate. Don't commingle your funds, because then you can't really tell what's happening. Absolutely get a separate bank account for your business and use only that account or your credit card for that business, and only use those things for that particular purpose. Don't mix those things in. That's where you start to get, say if you get audited by the IRS, that's where those gray areas and those things get tossed out as business expenses, because you've commingled your funds. So don't commingle your funds. That is rule number one. Make sure that you have separate accounts. Separate, even if you have multiple bank accounts, have your business accounts separate. And if you have multiple business, each business should have its own account, because those things are all treated separately. So even as an LLC, like I talked about last week, as an LLC, your business will still be treated on your personal return, but it's still, you can have multiple Schedule Cs on your return. Most people have several businesses. Most people are serial entrepreneurs. So you may have several Schedule Cs with your personal return, but each of those business needs to have their clear channels of funding, where that money came from, how that money was spent, and that needs to be clearly documented. That's where it gets tough at tax time, and that's where you start to lose those expenses, because you're just not keeping track of them. So whether you want to pay for bookkeeping services or whether you want to DIY it, that is an expense that you should not bat an eye at, because one of the things I tell my clients all the time about working with me, I'm actually free. You pay me up front, but then you write me off at the end of the year, because everything that we provide, all of the services that my accounting firm provides, we do it and you pay out of pocket up front, but all of that is a business expense and it's a write-off at the end of the year. So don't cheat yourself trying to save $1 and lose thousands of dollars and trying to DIY it. And if that's not your expertise, then don't try to figure it out. Carol, I see you nodding your head there.
Because you really want to make sure, the last thing you want to do is have a run-in with the IRS. You just want to make sure that you've got your subject matter expert, that you've had expert advice, and that everything you have is supported properly.
Absolutely.
And then you don't have to worry. Then you can just sleep at night.
Absolutely. And that's the biggest thing. And the nicest thing is when you, at the end of the year, instead of scrambling for receipts, because I've had clients in the past bring me a bag of receipts and I hand it right back to them, because do you want us to do end of year cleanup? Because now you got to pay for all 12 months of us doing bookkeeping on it. Or do you want to do it the right way at the beginning of the year or sometime during the year where we actually have time to go sit there and go through everything and actually do it the right way? Because let me tell you something, a lot of times in this space, a lot of your receipts are from Home Depot. And if you guys have seen Home Depot receipts, the ink fades immediately. So you cannot keep track of those things. I've gone through piles and piles of those and can't read a number on it, can't read anything on it. So now we can't guess. Or do you want to run the risk of guesstimating them, get audited, and then have to prove what these expenses were, and you come out with a bunch of blank receipts? So I say do it the right way the first time, save yourself money, save yourself time. And there's nothing really like the price of peace of mind and knowing at the end of the year, you can print off your profit and loss statement, or your accountant can print off your profit and loss statement. You hand it to your account and then you can walk away from it because you've done your due diligence. It's out of your hands and you've kept track of everything and it's accurate. So if you get audited, you're almost sitting there proudly ready to answer the questions because you have everything documented, detailed, and it's all laid out for them. So making sure that you set your business up properly. We'll go back to the last week's structure. Set up your business entity first. Even as an LLC, it's going to go on your personal return, but there's still value in having that business structure because you're going to, sorry about that. I turn this off every week and it still goes through. There's value in actually having that structure because you're really setting yourself up as a business. You can go open up a business bank account. You can start to establish business credit. And then that way you don't have to rely on your personal expenses that much to fund your business anymore. You can actually rely on your business to take care of itself and then in turn take care of you. And after you start to really increase your profits, that's when you revisit the structure of your business and see if you're able to actually restructure your business and say into an S corporation or a C corporation or a partnership. And then that way you can start to actually take payroll from your business, do that the right way. And then your business is really taking care of you, and that's when your business goes on its own separate return. Once you set up an incorporated structure, that's when your business becomes its own entity and it lives on its own. And then you're basically an employee of the business, but you still own the business. So you actually can get a W-2 from your business once you get into that structured setting. But first things first, making sure that you set up a profit center for your business, tracking your profits before signing on any dotted lines in this space or any other business space, running the numbers. If you need help running the numbers, feel free to reach out. That's something I actually love to do, breaking down something to the lowest common denominator and making sure that if it doesn't make dollars, it doesn't make sense, right? So if you're actually going to be in the red in a business, how long are you going to be in the red? What's the profitability over this business over time? You have to really think about, when am I going to be able to actually let this business pay for itself and I not have to fund it? Because when you step into the space, you're coming out of pocket to furnish the space, to sign the agreements, get the insurances in place. And like Carol said, a lot of these places sometimes they're fixer-uppers. You got to get in there, you got to get contractors in there to actually help to get the place up and running. Because one thing people are not going to do is they're not going to go stay at a dump. These places they don't have to be the Taj Mahals, but they have to be in safe areas and they have to look good. And the better your space looks, the more money you can command for it. That's why I said those theme spaces are really huge. My daughter stayed at a place I think it was in Atlanta, and it was a Barbie theme condo. So you have to think about things like that when who you're trying to attract to that space, how much you're trying to command for that space. And so what are you willing to invest to put into that? But upfront, you're going to need to put some investment in, but on your back end, you need to have run your numbers to make sure that you're going to be profitable in this space, and making sure that you structure your business the right way, that you're going to actually be able to see results from it. And when you're going to see results. So you may say, the first 3 months, I'm not going to bring in a profit. But you may be surprised, because if you put the right amount of work in up front, generally, as soon as you put it on these platforms, it's going to go. You're going to start getting bookings immediately if you're in the right place, you're in the right price point, and you've set the place up where it's attractive. A place that because you have to think, it's like Amazon on Airbnb. You're reading the reviews, you're looking at the pictures. So professional photography is definitely recommended. Definitely making sure that you list. People hire copywriters to write the copy for these units to drive the most people to their space. There's not a happenstance that somebody just throws some stuff up there and they get all these bookings. You have to, if that happens, you're just in a place where there's not a lot of options. But in most places, there's a lot of options, and you want to stand out. And how do you do that? You got to make it look good, and it has to make sense. But in order for that's the front end, but your back end needs to matter, because that's what got you in this business space anyway, right? So you need to make sure that your back end is structured properly. I want to make sure that you have your business entity set up right, that you have your banking set up right, that you understand how to log your profits, how to log your expenses, and how to forecast what your profit margins are going to be. Don't just jump into this space and not do your due diligence and do your work and do your numbers, because there's nothing like signing a 2-year contract, especially in rental arbitrage, because a lot of times what people want you to do in that space is you really have to entice those owners to bite, to let you sublet their place, right? So a lot of times you sign longer agreements, you sign it for more money. So say if the space would typically rent for $1,500, you may have to double that to entice them to sign a contract with you. So you say you're spending $3,000 a month on a space. Am I going to bring my money back? How am I going to bring my money back? Don't just sign a 2-year contract and then because here's what's happening a lot of times, and here's why there's a lot of these spaces are getting a bad reputation in certain areas, And it's getting really difficult in certain areas to actually get into this business because they're really putting up a lot of parameters around it. Atlanta being one, some spaces in Florida being another. Those are tough markets. New York is basically shutting it. They're putting so many rules up that it's almost impossible. But the reason is because a lot of times people have done the rental arbitrage. They didn't get approvals for doing it. So then they end up with an eviction because the people take them out of the space. Now you got to hit on your credit. You can't go rent something else because eviction is a red flag for anybody that's doing this type of business. And or you end up in the space. And here's what I've had happen with a lot of my clients recently. They were in the space, but the units have decided to not allow Airbnb or short-term rentals in their, especially in apartment complexes anymore because of whatever reason. Usually it's because people bring more guests than they should or that sort of thing. And so they haven't been renewing their contracts. So now a lot of people are packing up in Georgia and they're having to go to Texas or North Carolina in those spaces. So, but what you want to do is you want to make sure you structure your business the right way. You're prepared for whatever happens, that you've got yourself covered. But the main thing is having your back end forecasted and ready to go. You don't want any surprises in the space outside of something that happens that you can't control. But I'll open this up for questions now because I'm glad that you guys are all here. Is there any questions? Feel free. We're all family here. Join in. Hey, Cedric.
Sorry, I'm running out of battery. I got to charge up.
No problem. You guys can come off mute, ask questions. And I have people on Instagram here too. So if you guys see me looking up, hi, everybody. All right.
Katrina, what is the profitability versus what you've seen or hearing versus owning an Airbnb and just having a property that you're renting out for like a year or 2 year lease?
On a long-term rental?
Yes.
Oh God, it's double and triple.
Really?
It's double and triple. Yeah. So say for example, because if you figure, so if you have a property and say you're getting $1,200 a month, right? So that's really, you divide that in 30 days, that's $40 a day, right? Most times if you're going to rent something, you're not going to rent it for $40 a day. Let's say you rent it for $160 a night. And let's say you only rent it for, let's say 15 nights out of the month. That's $2,400 right there.
Okay.
So you've doubled your money in less time.
Right.
And then you don't have a tenant in there, you know what I'm saying? So you can get in there if you want to use it as your own personal residence. And then here's the thing too, here's a cool thing. So Airbnb and VRBO and the short-term rental spaces are not the only channels right now. So here's the cool thing. If you have a unique space and if you have a beautifully furnished space, they have things now. There's a program called Pure Space where you don't have to, it's not a short-term rental space. It's where somebody may want to shoot a commercial. Somebody may want to hold a seminar. Somebody may want to shoot a video. Somebody may want to come do their branding photo shoot. So where people just rent your space out for an event for for a few hours or for a few days, you can make tons of money doing that where you don't even have somebody staying overnight or you don't have these huge cleaning bills, because that's the biggest expense in this space is the cleaning bills. But the Pure Space, if you just have like a warehouse space that you can make whatever, you can just rent that out for Pure Space and people can just come in and do whatever, where it's hosting an actual event or just coming to use your space as a venue just for the look and feel of it, where they can do their photo shoots. Yeah, so I'd say on your question, Cedric, I'd say it would be double or triple that dollar amount on the long-term rental. Now, is there extra work in it? Absolutely, because the only way you're going to not be and there's a lot of people that have their units outside of the state. So but what's really nice is it's so automated now. If you put the right systems in place, you don't need to be there. You can actually hire a host that would actually go into that space and manage that unit for you, hand over the keys. And now you don't even need to have keys. You can have the remote locks where you can change the code every time somebody leaves. So
Yes.
you don't, you don't. And if you have your cleaning teams on autopilot, and if you have 3 sets of laundry sitting there, they just change the set that's there with the backup set, take the other set and take it when they go. You just have a system in place where it's really an automated process. So it's not as laborsome, but it is labor. It's definitely more labor than it is for a long-term rental, because that's really passive income. It's just coming in every month.
Yeah, I have a client who they bought a building in St. Croix, and it's just they just roll it up. They just roll out the condos. They have a management company there, and they take care of everything, and they just collect the fees. All they had to do was invest. They had to put the cash in to buy the property, and then the rest of it is done.
Yeah, and if they have now, even if you don't want to go all in and actually be a part of this, there are like where you can just invest dollars into these pools for short-term rental spaces, and you earn money like dividends every month or every couple months. There's a lot of those where this is becoming like a stock, where you can just join investment groups and invest into properties as a big investment group. So there's opportunity to enter this space in multiple channels. I actually have a course coming up on March 25th where we're going to cover all of this stuff. What you're getting right now is just bite-sized bits of all this stuff. So we're going to cover all of this stuff and all your options and opportunities, and how you can really have a build a wealth accelerator with the short-term rental space, because it's a huge business opportunity. And I think it's such a low entry point to enter, because at first everybody thought you had to have rental property to do so. But as you see, they tweaked the game, and you don't necessarily have to. You can come in from all these different angles, and the profits are instant, and the profits are tremendous. So I recommend everybody, if you're not interested in actually doing it, then definitely figuring out a way that you can actually build some passive income from it, because there's opportunities on that front as well. Any other questions? All right. So you guys know how to reach me. I'm on Instagram as a tax whisperer. You can inbox me on Facebook as Katrina L. Martin. And my number is 313-769-9694. Or my email is info@wildtaxes.com. And I look forward to talking to you all, and have a great weekend. Bye, everybody.
Also, for me, if you want to know anything about cost segregation, or you want a proposal, just tell Katrina you want it from me, and she'll contact me and we'll get it done.
Definitely. Absolutely. Thanks, Carol.
Thanks.
Thanks, everybody. Have a
Thank
great
you so
weekend.
much
You're
for the
welcome.
information. Thank
You're
you.
welcome. Bye-bye. We'll talk to you soon.
Bye.